Hello and welcome again to the NWR Virtual Investor Conference. Today we'll be hearing from Global Energy Ventures, GEV is the ticker code. It's developing integrated compressed shipping solutions transporting energy to regional markets, and the business model is to build, own and operate integrated energy transport projects for either natural gas or hydrogen. And its primary focus is the development of integrated compressed natural gas marine transport solutions with the company's construction-ready CNG Optimum ship. And it is a well-proven gas transport solution with design and commercial advantages, along with being safe and a lower emission solution for transport of gas than in the form of liquefied natural gas, LNG. And the company recently completed a scoping study that confirmed it can deliver an emission-free compression hydrogen supply chain that will be a competitive, large-scale marine hydrogen transport solution. Well, let's get straight to it. But before we do, just a reminder that if you'd like to ask questions, do so in the Q&A panel on your screen. Well, let me now introduce Executive Director, Martin Carolan. Martin.
Thank you. Good morning or good afternoon, everyone. I'll be giving you a quick update on Global Energy Ventures. I'm the Executive Director with the company. We're excited to present today's NWR conference. So just quickly on the corporate overview and the snapshot, GEV is the ticker, $45 million market cap. We have a healthy cash balance of $8 million. We've recently raised equity, so we are now sort of fully funded through our program for 2021, which we'll talk about shortly. In terms of the ownership structure of the company, the board and management remain the largest shareholders with roughly 13% and a bit more under a fully diluted basis. And we have a fairly tight register, up to top 20 being 50% and thereafter 60%. In terms of the board and management team, we do run a fairly lean and small structure, but in terms of experience, we're big on gas-fired power stations, LNG development terminals, supply chains, chemical tankers, and capital markets. And the two fellows at the bottom of the screen there, when we talk about our IP and our shipping capability. So John and David joined the company in 2017 or 16, and they bring with them 20 to 30 years of experience in terms of shipping design and approvals. So we have a very solid roundup of individuals, and I guess we're a team that's experienced in value creation, and we are aligned with shareholders in terms of our equity. So the assets of the company, as mentioned in the introduction, we are developing integrated compression shipping projects. So that's to move green energy projects in the form of natural gas, or indeed more importantly now in hydrogen. So we have been developing the CNG Optimum ship for natural gas over the last 3 to 4 years. That's now at a stage of ready for commercialization. It's been through all the various necessary approvals over a 2-year time frame. So that now has full design approval to transport compressed natural gas with a containment system that is unique to our design with 2 patents. So that contains 200 million cubic feet of natural gas. We've been working in various regions of the world with energy majors and different developers. More recently, in the last 18 months to 2 years, that focus has been in Brazil in terms of our announced projects. So we've done a lot of technical and commercial work there, and I'll talk about that use case shortly. So we're now sort of seeking that feed level acceptance. So we're beyond the R&D phase and now into that commercial decision phase. And so with that, we were watching the phenomenon of hydrogen last year fold out. And so really almost 12 months to the day, we started developing what could be a compressed hydrogen shipping solution and supply chain. So that's now a world first in terms of compression. It's one of the largest ships in terms of capacity outside the ammonia vessels. From a pure hydrogen perspective, that's been announced. Today, we're announcing the approval in principle, which we'll talk about shortly in terms of the first stage of our approvals. And so really, this is the development of 100% green hydrogen supply chain, emission-free from the point of production through the point of delivery. So that's seen to be the holy grail from an industry perspective. So it's all about shipping approvals and developing towards a pilot project, and I'll talk more about that program shortly. For those who have followed the stock in the last couple of years, we've been spending a lot of time on the CNG business. I'm just going to touch on that for a couple of minutes because it's important as to where we've come from to where the relevance is for hydrogen. So CNG is established as an alternative deep water pipelines and reinjection. So compression is used in all various formats of natural gas today. And so the development of our fleet and supply chain process is really suitable in many different regions. It doesn't profess to take on the likes of LNG, but it does compete against pipelines in short distances, and indeed in short distances around the concept of LNG. So our proposal really is to put forward a technical solution for the loading, a fleet of ships to transport and store, and the unloading. So that's the full supply chain that we work on. We're not just building ships for the point of charter. So we've been working in Brazil with two key operators. There are multiple projects there going out into development for the next 30 years. These are very large projects located 200 nautical miles from shore. They're in very deep water sea. And so these are large FPSO projects under development where they are producing the oil and then compressing the gas. So typically their only commercial solution would be to build a pipeline, which in some instances can take 7 to 8 years, or they are re-injecting the gas. So our proposal to the operators of these assets is really to, instead of re-inject the gas at a cost with no economic value, let's take that gas, re-inject into our shipping fleet, our transport to shore. That's a very short sailing distance of less than half a day, and unloading that cargo directly into their network. So the commercial structure is we don't take on the molecules. All we're doing is acting as the transporter or a tariff fee. So the key to this is taking $1 billion worth of capex away from the operator and giving them back, quite an economic and a competitive, operating cost. So we are right at the point of feed level acceptance. We are now working with a second operator, which will be updating the market shortly. So we've been extensively working there. So we've got full technical acceptance. We are now negotiating on competitive charter rates. We have a really viable solution. So for the message for the market today, and indeed our shareholders, that the CNG business is by far means over. One of the things that we've looked at in terms of our supply chain on CNG is all of our technical partners are now starting to work in the areas of hydrogen. So that's been a huge advantage in us to start to build out our next supply chain. So today, given we only have 20 minutes, I'm going to spend a bit more time on our hydrogen business, which is new and exciting. In terms of the macro backdrop, I mean, you couldn't ask for a better investment thematic. The tailwinds here are quite phenomenal. So if there is objectives to get up to 20% of primary energy consumptions, we're talking about multiple trillions of a market that can be established. We've then seen almost 20 countries now and beyond put together their hydrogen strategies. Many of those have come with large stimulus checks to build out the downstream infrastructure. We've now seen global ESG funds rally around the sector, and we've seen some phenomenal share price appreciation offshore. I think we haven't seen that investment made in Australia as yet. Earlier this year, we've seen the announcement of some $300 billion of capital committed to value chain projects. So that's the upstream, midstream, and downstream. This is despite the fact that new storage and transport solutions really haven't been delivered to the market. So this is the opportunity for our company, is to get involved and build out what would be a world first compression supply chain. Cost, you'll hear a lot about this $2 target to reach pricing parity. Over the next 5 to 10 years, you'll start to see that come through. I think with any new business, you start at a high cost and move down. I think we're going to be surprised at the rate of which that target can be reached. End markets are now evolving, and obviously industry demand charts are now starting to appear. So our program, as I mentioned, we started almost a year ago. So we've been working at this for some time. It's not just a new initiative with a hydrogen sticker on our CNG ship. So we've developed what is the first large-scale zero-emission marine supply chain as CH2, or compressed hydrogen. This ship will carry 2,000 tons in terms of its capacity. It operates at a pressure of 250 bar, so not a overly high pressure environment. So in November, we went public with our ship specification. We then engaged the American Bureau of Shipping. Approvals is a very key part of our program. The key technical barrier of our overall program for compression in the hydrogen space is really the design approvals for the ship. So we've lodged a patent application around the design. in January, we announced the first MOU with Ballard Systems. This ship is designed to run in an emission-free environment. So that's electric drive engines powered by fuel cells, and those fuel cells will run on hydrogen. Conveniently for us, we have 2 very large tanks of hydrogen. So that solves the issue, and one of the key challenges for other shipping fleets as to where do they put their hydrogen tanks and how do they run those efficiently. In March, we released a scoping study on the 1st of March, which I'll talk about shortly, which proves out that we really do have a competitive offering. And then today we were delighted to announce our approval and principles from the ABS. So that's the American Bureau of Shipping. That is our first key de-risking milestone in terms of the CNG CH2 ship. And so what does that mean? So there's been extensive engineering review and analysis undertaken by ABS with respect to the different classification rules and regulations. In terms of hazard scenarios, again, extensive analysis that demonstrated that there were no unresolvable or unmitigatable impediments to the ultimately successful design and development of this ship. So with that in mind, we're now moving forward through an agreed roadmap with the Classification Society, and that's probably another 12 to 18 months that we'll see to final class approvals, and that will be ready for construction. So in our view, this should be the first large-scale ship that hits the market in terms of a pure hydrogen carrier. So our focus primarily is down here in the Asia Pacific, and I guess that's, 2 key reasons are that the large-scale green hydrogen projects with access to markets are now coming through, and obviously we're operating at the lowest end of the cost curve in terms of the production costs of green hydrogen. So Australia has an abundance of renewable resources that's translated into a significant number of projects. We're focusing on the bigger projects with big balance sheets and capability. Indeed, Australia already has 5 of the world's top 10 announced projects globally. We have a national strategy. You're seeing state and federal governments appoint ministers, and there's funding that's coming behind that. From the demand side, those key markets that we're looking at: Singapore, 2,000 nautical miles; South Korea, Japan, 3,500 to 4,500 nautical miles. So those are the key markets that are driving the demand side. As one example, Japan last year had announced their intentions to increase their import demand from 300,000 tonnes per annum to 10 million tonnes. Korea, you're seeing huge investment by government and corporates in the downstream markets. So over the next 5 to 10 years, this is a 25 to 30 type horizon, you're seeing significant multiples of what Australia can produce. So that's the opportunity for CNGs to get amongst that and get into the mix. In terms of, we talk about a supply chain, so what does that really mean? Our supply chain leverages compression. So compression in terms of an onshore storage and transport solution is a proven technology. So we're not introducing anything new to the mix. The only thing we're introducing is a new design to store and transport from a ship perspective. So our process really is to take the green hydrogen that's produced from a renewable source through the form of electrolysis. We then compress, load that into our ship at an operating pressure of 250 bar. Our concept is that we always have a ship berthed at the port, therefore this eliminates the requirement and additional capital for storage. Our view is that there's flexibility in shipping versus onshore storage. The CH2 ship then stores and transports the hydrogen in a pure gaseous form. So we're not liquefying it, we're not changing the properties, it's at ambient temperature. So that keeps the simplicity of the process and obviously capital costs and technology barriers down. The CH2 ship is a closed system and does not resolve and boil off. I mean, again, that's a bit of a technical term, but really that's important in terms of there are no losses other than the fuel we use through the propulsion system. And then at the customer end, we simply arrive at a dedicated facility. We unload that pure hydrogen for fuel cell applications. The ship will unload unassisted, beginning at its operating pressure and decantering down to the receiving pressure. Then there's some minor scavenging compression required. So very simple, low operating and capital costs at the loading, the unloading end. And it's really for us now to move forward over the next 12, 18 months and get our ship economics correct. As mentioned, on the 1st of March, we released a scoping study. This scoping study was really to define on a levelized cost basis for using a produced green hydrogen product in Australia and moving that as far as South Korea and Japan, and delivering it as pure hydrogen, what was the competitive range in terms of scale and distance? So we looked at volumes of 50,000, 200 and 400,000 tonnes, and we looked at market distances from 2,000, 4,000 and 6,000 nautical miles. And so we really needed to test that economic and competitive range for our compression solution. We were delighted to see that on a levelized basis, that compression is very competitive on a 2,000 nautical mile radius. So you can see in that graphic there, think Midwest WA up to Singapore, and indeed up to 4,000 nautical miles, we're still competitive or relatively in the mix. So I guess that translates to the simple and energy efficiency of our process. Important, this study, it addresses the need for pure hydrogen, not in forms of ammonia. We had minimal technical barriers, and I'll address some of those others in the competing supply chains. And that really what we've discovered is that compression is the ideal solution for the volatility in renewable generation. So there's this concept of load follow, which matches the rate at which we can load our ship. So you'll start to see us talk more about that. This slide has quite a bit of graphics on there. I'm not going to go through the details of each supply chain. There is some extensive explanation in our scoping study, but the key findings are important. And when people are trying to understand why compression hasn't been used or nominated to date in terms of the supply chain, you've seen all of the large projects here in Australia either talk about liquefaction or ammonia. But the observations are quite simple. You can see here that all three supply chains start with compression and at a similar pressure to our CH2 process. So we're not introducing any new process steps at the beginning of that supply chain. From a loading and unloading point of view, we use very little use of the power that's required, and most of our fuel use is in the ship. When you look at liquefaction, they introduce a very new and challenging concept straight up in terms of taking that gas hydrogen and turning it into liquid and storing that at -253. So this is a process which is still yet to be defined at scale. They then have the concept of boil-off gas in their ships. Clearly, there are groups working towards target rates that would deem to be economic, but we still haven't seen evidence of where that's going to be achieved. So we've been using the concept of a 1% boil-off of that cargo per day, which is quite significant in terms of when it compares to an LNG project. So two key technical barriers still to play out there in the liquefaction space. With respect to ammonia, we absolutely acknowledge that ammonia has been the viable and supportive process to date. It is a mature process. Ammonia is currently shipped. However, we do want to highlight that new ships will be required to be developed in terms of using ammonia as the fuel source. And then the key requirement at the customer end is if I'm a customer sitting in Asia and I only want hydrogen, yet I'm getting delivered ammonia, I need to go through this process of cracking. So this cracking process simply separates the N from the H, and then I need to make sure that's a pure product. Again, you're starting to see stories about some technologies here. That technology would deem to be 5 to 10 years away from, in our perspective, from what we've seen so far, but it will come to the fore. So we're not saying that liquefaction or ammonia can't work. We're saying that compression really is in the mix. So if you're looking to start markets inside the next 3 to 5 years, our solution can be ready and available, while the others at larger scale are still trying to prove out their supply chains. So what are we doing now? So we're now at the stage where we've completed the first stage of our approvals. We know the roadmap to get to ultimate classification and ready for construction. We have a competitive scoping study which needs to build out. So we're now focused in areas around the mid-north Australia. So think Midwest WA up to Northern Territory and down to Gladstone. So there are already nominated projects that have been in a feasibility stage for the last couple of years, which we're now starting to talk to. We want those partners to look at the evaluation of CH2 as an alternative or potentially their primary source of supply chain. We've also identified that our ability to control our destiny in terms of a pilot scale project for our ships is perhaps to develop our own renewable hydrogen project. So we are now looking at sites in areas to produce our own hydrogen. We've seen a few juniors in recent months come out with some statements about the prospect of their own projects, but I would question our ability to get to market would be superior given that we can have a fully integrated supply chain. So that's from production through shipping and delivery. And we have some ongoing strategic technical partners looking at our supply chain with respect to electrolysis and compression. So we're at a really exciting stage, and this is moving quite quickly, and you'll expect to hear more in the coming months on each of those key initiatives. Lastly, and just one more message. So, Australia and the Asian region is not our only space for market access. We've been approached by groups in Europe. Europe has massive offshore wind installations going on where there's excess capacity. Can they connect that to the local grid on shore, or do they turn that into a green hydrogen gas? If they do that in an offshore capacity, how do they get that to shore? So there will be instances where pipelines are not suitable. So we've seen approaches already to look at compression shipping solutions. This is 200 to 300 nautical miles, less than half a day's sail. So very competitive for our proposal. And again, we hope to make some more noises about this capability in the coming months. So just to wrap up in terms of our investment summary, GEV is fully exposed to what we see as one of the top 10 global investment thematics. Our leverage to hydrogen is through the use of IP and a competitive approach to transport and storage, which is still missing from the overall value chain. We offer a zero emission supply chain, which is critical to the overall long-term objectives of this industry. Our first stage of approvals today reduces the technical barriers, and we have a clear roadmap to get there. We're fully funded for our program. I think we've got a fairly undemanding market cap of 50 million. CNG can still deliver for us. So, for any shareholders or new investors out there, we haven't parked that. We are still pushing hard on those opportunities. And again, as I mentioned, an experienced team, and we're aligned in terms of equity ownership in the business. So with that, I'll take any questions.
Martin, thanks very much for that presentation. Well, let's get to the questions. The first one, all the energy majors are talking about hydrogen, Fortescue among them. They're driving hard in the space. Do any of them have a shipping solution?
Well, it's a good question. You've seen a number of the Australian developers or energy majors and indeed globally, they've all so far they've put perhaps either 1 foot in ammonia or 2 feet in liquefaction and one in ammonia. To date, there has been little in the way of liquefaction ships developed at scale. There's one pilot ship that's about to transport a liquefied hydrogen product from Victoria to Japan. I mean, it's only been built to take, I think it's 100 tons, so very small. Fortescue was interesting. They announced the other day their intention to design a new ammonia ship. The challenge for these new ships is obviously if they want to operate in an emission-free environment. So the fuel source driving the engines is still a development profile that's still some time away. But clearly ammonia has the advantage from a shipping point of view, but we don't see much development so far in the LH2 space.
Okay, so question just in far, I guess the capital expenditure on these ships. If you have a bankable project with large bankable partners, I would imagine that the project financing would be readily forthcoming. What have you found?
Well, we've been extensively looking at that in our CNG business. So again, for those who follow our efforts up in Brazil, we're talking to AAA rated majors. They are looking at long-term 15-year type take-or-pay arrangements. Our supply chain is predominantly up to 75 or 80% shipping. So there's a very deep pool of investors for shipping, and indeed the debt markets, in some instances, you can get up to 80% leverage on those types of projects. So hydrogen will be different given it's a new class of vessel, but I think it will all come down to the counterparty, and we will only be dealing with those that have the requisite capability.
And Martin, just a question in regards to safety. Obviously, this also comes down to potential barriers to navigation, which you'll have to negotiate that as far as each regulatory authority is concerned. But this question goes to just how safe is this? Well, to put it bluntly, what's to stop a ship from blowing up?
Yeah, well, that's the question we've had a few times. Look, historically, there's been some issues with hydrogen in terms of its issues, but today's announcement, if you look at it closely, it reinforces the point that you cannot get through an approval in principle stage without undertaking extensive hazard scenarios. So what does that mean? So we've designed a ship, and we have mitigation steps and practices to be put in place such that there is zero chance of catastrophe. So apart from a missile hitting a ship, there is zero chance of catastrophe, subject to us going through and meeting the various roadmap steps that we need. So we wouldn't be at today's stage unless there was a high probability that we can control all of those scenarios, which would lead to any form of issue such as you've raised.
And Martin, do you have a competitive advantage, certainly in terms of design, capacity, and costs?
Well, we definitely have an advantage in that, you know, it's not an easy process to design a ship. We've come from a background of, you know, 30 years of shipping design and approvals. We spent, you know, the last 3 to 4 years on our CNG vessel. So from a compression point of view, you know, we would think there would be other alternatives that may follow. But our compression, its advantage is its simplicity and efficiency. So if you're going to produce a product in market A, which is an energy source, and turn that into a battery, which is hydrogen, and then deliver that same product at the other end, you really need to use that same energy to make it emission free and use the least amount of that energy to get it there. So that's when we talk about competitive advantage. Sure, some other shipping solutions on a volume density basis may have more volume, but they use a lot of energy just to get it to a process in order to ship and then unwind it, whereas compression keeps it in the same state.
Martin, we are out of time. We do appreciate your presentation. Thanks so much for joining us from Global Energy Ventures.
Thank you very much.